As someone who has been stacking silver since 2013, I admit that it's getting a little difficult for me to cough up more than $40 for a coin that I used to buy for less than $20. For new stackers, however, the challenge must be even more daunting. They still don't know for sure whether this bull market is sustainable and will lead us to new all-time highs, or fizzle out like we've seen in 2016 or in 2020, followed by a long period of consolidation. At the same time, they can no longer claim to be getting in at the ground floor. Since the beginning of 2024, the price of silver has almost doubled, which means that it has plenty of room to fall. For instance, in the event of a recession, which will slash industrial demand dramatically. This is why we must refer to the charts. Only the hard data can give us an honest picture of where we're standing, devoid of any bias or emotion. The chart which I return to time and time again is this one, the inflation-adjusted price of silver. When taking into account the deteriorating value of the dollar, the true potential of silver is suddenly revealed. In today's dollars, the 2011 high is equal to $70 an ounce, and the 1980 high is equal to no less than $200 an ounce. Since inflation keeps marching on, these numbers are constantly growing, and I need to update them periodically. Since silver has already traded for these prices, there is nothing preventing it from reaching them again. But wait, these numbers are based on the official Consumer Price Index, which we know is rigged to understate the true rate of inflation through various statistical manipulations, such as hedonic regression. Privately published measures of inflation put the figure much higher than the CPI. For instance, according to John Williams' Shadow Stats, since 1980, prices have risen by a staggering 3,100%. Therefore, in today's dollars, the 1980 high in the price of silver is equal to no less than $1,600 per ounce. Such data gives us a completely new perspective on silver. Instead of a commodity which is moderately underpriced and has a fair potential to appreciate in the coming years, silver suddenly appears to be radically underpriced, with the potential to appreciate by orders of magnitude. The only way to refute that is by arguing that something fundamental about silver has changed since 1980. Has the demand for silver dropped since then? On the contrary, as the best conductor of electricity and heat, there are numerous industrial applications for silver, and the demand for it increases every year. What about the supply of silver? Well, as the methods of mining and refining have advanced, the annual supply of silver has indeed increased over the years, but not to such an extent that would flood the market and explain such a drop in its price. Moreover, it appears that the supply peaked in 2016, and since then has been on a steady decline. The continuously low price of silver hasn't incentivized the development of new mines, and it would take many years to reverse this trend. As a result, the silver market has been in a state of deficit for 5 years. These deficits are slowly depleting the above-ground inventories, and if something doesn't change very soon, we will eventually experience a shortage. On top of that, we're living through an inflationary period, which undermines the trust in paper currencies and in the governments which issue them. There is reason to believe that in the coming years, The public will seek an alternative to government bonds, which is not the liability of any third party and cannot be inflated away. The only such alternatives are the precious metals, gold and silver. And as gold becomes too expensive for the average person to own, silver will become the only other option. After all, an ounce of gold already costs more than most people make in a month. Indeed, as we've been told over and over again, gold and silver do not have a yield. But in a world in which the rate of inflation is higher than the yield on government bonds, this argument is no longer relevant. No yield is better than a negative yield. And whatever silver lacks in the yield department, it makes up with an incredible potential for price appreciation. Again, there is nothing preventing it from recreating its 1980 high on an inflation-adjusted basis. People often argue that this high was artificial and was only due to the Hunt brothers' attempt to corner the market. My study of events shows that this was not the case. I urge you to watch the video I made about it not too long ago. I'll put a link to it in the description. According to my findings, the federal government used the Hunt brothers as patsies to explain the inflation which was raging at the time. If it wasn't for the market intervention by the COMEX and the CFTC, the price of silver could have rallied even further, collapsing the US dollar and forcing the government to re-monetize silver. Keep in mind that during the 1970s, there were very few large players in this market. Both Eastern Europe and China were behind the Iron Curtain, and their citizens were unable to invest in silver. Electronic trading did not exist at the time, and very few people were savvy enough to access the futures market. Today, we're living in a completely different world. Everyone holds a smartphone in their hand, which allows them to invest in any asset that they wish within seconds. There are plenty of wealthy people in Eastern Europe, China, and the Middle East who do not follow American laws and are not beholden to the US government. Thanks to the Fed's QE programs, there is a huge amount of capital sloshing around and looking for investment opportunities. Once the price of silver breaks out to new all-time highs, it will catch the attention of investors, and the federal government will not be able to stop it. If it tries to prohibit them from buying silver futures on the COMEX, they will simply do it on the Shanghai Gold Exchange. As the arbitrage between East and West grows wider, metal will flow to where it is appreciated. The COMEX will lose control over the price and will become largely irrelevant. The bottom line is that you are not too late for silver. As a matter of fact, this train has barely left the station. Even though in the past couple of years the price has almost doubled, it is still historically cheap. In the long run, it won't matter whether you bought it at $20 or at $40. It only matters that you get it in its physical form before the true mania begins. Before I leave you, here's an extra chart that should grab your attention. It's of the popular SILJ ETF, which invests in junior silver miners. This ETF has just broken out of a 12-year-long consolidation, an event you don't get to see every day. This is a vote of confidence by the investment community in the commodity which these miners are taking out of the ground. The smart money is apparently headed towards silver, and in my opinion, we should follow their example. Thank you for listening to the Silver Hermit podcast. If you like this content, please donate in the link which appears in the description below. Please subscribe to this channel and share it with your friends and family. Hit the bell icon to be notified whenever I release a new video. Remember, I'm not a licensed financial advisor. This video is intended for general informational purposes only and should not be regarded as investment advice. Before taking any investment decision, please consult with a professional financial advisor who may assess your personal investment objectives and needs.